Boom, we are live, ladies and gentlemen. It is Monday morning here in Costa Rica. A little bit of rain, a little bit of protesting. Everyone feels happy. We're going to be taking a look at Bitcoin. We're going to go over Ethereum, the Binance play. We're going to take a quick look at Link as well. I'm sure a few of you will be excited about that. And Avalanche as well, because we get the word from the tech team that there's an A-OK to keep an eye on some of these. So we're going to start just like that and flow over to the Bitcoin shot here. Now, one of the things I always have to remind myself, and what I try to reiterate to others, is that if you are serious about becoming an investor in any sector, patience will be one of your biggest allies and one of your most formidable enemies, because you have to be able to wait through the changes in the market to become ultimately successful. As an example, if we scroll back all the way to 2014 here, from the previous peak of 2014 to the length it took for the breakout to occur, let's call this the accumulation range. You're talking about 1,200 days before the breakout of the box finally occurred. 1,200 days. It's 3 years basically, right? Most people don't have the capacity of patience to consistently keep moving into a market knowing how long those things take. So today, if we fast forward into the market where we're at now and we move from the selling climax to where we are, it's only 680 days. So we're approximately halfway through what took the last accumulation period time to move forward. So one of the interesting things here that I want to go over is just that length of the investment story. So if you're in our private group, you will have been reading books like Reminiscence of a Stock Operator, books by Richard Wyckoff, and many other great market operators, people who have made hundreds of millions of dollars in the market. Learning from their mistakes and learning from their lessons is extremely profitable. So one of the things we try to do is revitalize these old lessons, because there are so many hype-driven channels like Bitcoin's going to $1 million tomorrow because there's great news, or is it going to nothing because of the CFTC? We try to ignore all that. It's noise in the long run. The only story that we're concerned about here is the supply and demand, and ultimately, is there demand and is there supply left? Now, Bitcoin could very easily come down to the $6,000 mark here. It's very easy to think that, yes, this could be the case. So if it's not going to come down this low, what I do suspect is that we get an SOS right away. Now, this SOS is very common in the market placement. We've saw it in Ethereum, and we've seen it in a few of our other plays like Fetch, where we had 400% against Bitcoin's price since March. A massive win for anyone who had been in the bear family playing that one since June. Now, this SOS represents the real movement into a bull market, and it's followed very quickly, usually by a backup afterwards. Now, again, the mark of a good investor and trader here, being those ideas we've gone over in the past, patience, is going to pay off. Because if we look at the 4-hour, again, we want to remember that anyone says that they can predict the market is lying. We don't know what's going to happen. We don't know where the market is going to take us. But we are very, very shortly here going to get a confirmation around this trading range. So if you're new to the Wyckoff method or any of the old trading styles, which are the most lucrative and have most profitable, and for some reason the most underutilized, I don't know why it is, probably because there is no hype. We're not trying to tell you can make millions of dollars from the next biggest altcoin pump. You can get lucky. Yes, that's true. Lucky. But playing it effectively is a much different story. So here we're seeing a new trading range start to take place. For any of you, again, that have been studying, you'll recognize that there was a UTAD test here, followed by a last point of supply weakness, and then the drop into our selling climax. These 3 points are fundamental because this is what formed our new trading range. From here, we saw the selling climax, which, again, these are smaller trading ranges, so everything kind of evolves around a fractal-like nature in the universe. So we saw a selling climax and our first automatic rally. What's interesting now is this long trend line that we've been following upwards here. Now, I didn't put it in exactly reflexible with it, right? I could go, oh, I'm going to move it up here, and we've broken through the trend. We're like right on it, basically, here you can see. Now, what's interesting is that this would lead into our play. Now, we haven't produced these PDFs yet, but they will be coming out in October for all the private members, and the newsletter will come out this month, so stay tuned for that. If you're not a private member, sign up today. There's no risk because we offer a money-back guarantee, no questions asked. Just follow the links below. And also stick around to the end of the video because we've got something fun for everyone that already is a private member that we want to go over. So here, this trading range is producing either what's going to become an accumulation range that goes up or a distribution range which goes down. If we go down and we break below this range, we're coming a lot lower. We're easily coming to $6,000. That's not my bet. My current bet is that we get the SOS here. So we see the automatic rally, the secondary support or the supply test, another supply test. We probably see quite a bit of a spring here, a fake out action, a break above, a smaller SOS, and then a bigger SOS that comes out near the top. Again, remembering these are fractal in nature and they can repeat in smaller or bigger versions of themselves. It's very clear that what we're looking for is what's known as a jump across the creek. So the creek will probably do something like this, and you can even see that it comes all the way from back here too. So we've been stuck below this creek and on this current trend line. If we start to break up here, we could actually see another variation of a reaccumulation pattern. Now, these are all posted in the private and educational center, so you'll know what that looks like, where you get a creek resistance check. It would come like this, and then it would start to move and get stuck in between this area, and then you'd see the blow up. So these reaccumulation patterns have a few variations that they can produce themselves in. As you've seen, there's probably around 4 or 5 different ones. When you're tracking an animal out in the wild, the footprint doesn't always look the same. But a clear break above the box and a close above the box in the backup phase here is going to be very bullish. If we get a last point of supply weakness here like this, it's going to become very bearish. I like the quote. There's a few quotes I've really enjoyed lately. I'm going to start off by saying it's easier to watch few than it is the many. That's a good first one. And the next one I'm going to say there's only one right position in the markets. It's not bearish, it's not bullish, it's being on the right side of a trade, right? So if we get an SOS here and a bigger SOS, bullish. If we get a last point of supply and a weakness check here, bearish. Pretty simple stuff. So what I do here, and what I suggest everyone do, look guys, as a teacher, I can give you one corner of truth. There are 4 corners though, and the other 3 you have to find yourself. It's only going to be created invariably through your own experience. So what does this mean? It means that anyone who tries to predict the future is lying. They don't know. They don't actually know. I don't know, but what I can do is I can go over here on TradingView, and if you're new to TradingView, guys, you can click on the right-hand side here, and you can create alerts for each of your trades. That way, if it breaks below here, I get an alert, right? So I'll go click this, just so you know, and you go add alert, and I'll add one up here. Click this, add alert. And what I do is I try to gap them up and down, so I'll just create a few alerts right now. And that way, when the market tells me what's happening, because the market is smarter than us, markets are always right, opinions are often wrong. So let's ignore the opinions of other people and let's listen to the market. So what I generally do here is I set up this chunk of alerts on either side of the market. This will tell me what I'm going to do. I'm not going to guess this early on. It doesn't make any sense. Here's the date of the, November 3rd, November 4th, boom. This line here that I'm about to draw in, this is the approximate date of the November elections. I personally think Donald Trump is going to get voted in again. I'll also reiterate by saying I don't give a crap. I don't give a what happens. I'm neither for Biden or Trump. I think voting is retarded, and you've given nobody any good choices. They're all crap. But I think we're seeing the market already signal that Trump is going to get voted in. So remembering that the market is smarter than us, what I want to do right now is actually go back to one of our more poignant indicators, which is the market at large. So we're going to leave our Bitcoin thesis for a second. And what I wanted to go do is look at the bottom in the right-hand part of my screen here where my mouse is all big. Here you have the NASDAQ, the S&P 500, the Dow Jones Industrial Average, gold, silver, oil, crude, Tesla, all in the green right now. Look at Square, 6% up today. PayPal, 2%. Spotify, 3.2%, right? Big moves. Big moves. When I wanted, okay, well, let's look at this for a sec. First off, let's take a look at Zoom since 2020. This is Zoom, ladies and gentlemen. This is the everyday stock market at a 6 times return. Well, screw Bitcoin. Like, Bitcoin didn't even do it close to that good in terms of productive value or return on investment. Zoom kicked the out of Bitcoin this last year for sure. But I'm not too interested in the traditional market. I'm interested in finance, in what's not yet here yet, the future of finance, effectively. But in the old markets, what we're witnessing is just as important. We've entered a trading range here on the S&P 500 that I want to point out. I'm sure I'm not the only one that has seen this. And what does it look like? Well, it's starting to look like we might have seen a UTAD test, and we might see last points of weakness, which would signal a downtrend. Now, the market's smarter than us. It could very easily come above here and create a new high and continue out. If the market breaks above this and holds above this line here specifically, I think the market is telling us that Donald Trump is going to become president, because he's a much better choice than Biden for business, at least. That's what I'll say. Neither of them, again, are good choices. Like in your comments down below, somebody's like, oh, Donald Trump, Biden, blah. I don't give a crap. I'm not an American citizen. I don't give a It doesn't matter to me. I only care about the market's value and my return and my investment and my portfolio, and whether I should be in the markets or not. If we see a big dip in the S&P 500, we will see a dip in Bitcoin, because it is a speculative asset, right? It's also a tech asset, which is the S&P 500 represents basically the entire tech sector. So what I'm also going to do is the exact same thing that we just talked about. I'm going to set alerts on the top and the bottom of this trading range. The market is always right and opinions are often wrong. Remember that. That's a great quote. Jesse Livermore, someone who's made hundreds of millions of dollars in the market. I'll scale himself, whatever, doesn't matter. So now that I have alerts set on both sides of the S&P 500 and Bitcoin, I feel very confident that when the market tells me what to do, I will be in the right position to do so. Now, we'll go back to our Bitcoin thesis here, because I think it's important to lead into the next point, which is our leading indicator, Ethereum. Now, I've talked about this for the last 2 months now, basically. August, September. Yes, I've talked about this for the last 2 months. I want to make sure my dates are right. Ethereum is my leading indicator. It's not my market alpha. I don't base my portfolio status off of Ethereum. I base it off Bitcoin. But what's nice about Ethereum is that we've already produced, if you can see here, the SOS phase. So we had this big SOS, and now we're coming into the backup phase. I had speculated at the start of this that we would see a break above the creek, a smaller SOS, and then a continuation upwards of $800 to $900 on Ethereum for the first move. Somewhere around this line here is where you're going to hit your first point of trader sentiment and resistance. Now, what's really fascinating to me is that we've already built a new trading range here, right? You can see it with these big green lines I've posted in here. So we've formed a new trading range. Could we come down to $240? Yes. If Biden gets voted in, that's probably what will happen. The markets, I do not think, will react well to that. Some people might think that they would react positively to Biden, but I don't think that those people know a whole lot about economics or the business interest of the United States. Unimportant jargon of nonsense. I don't really care about the election. It's stupid. Elections are stupid. We should have much better people to vote for if we're going to vote at all. But anyways, the point of this is, if we ignore the outcome and only look at the potentials, what we see is that, okay, if we had our SOS phase come in and we're moving into our backup, where does this leave us? Ethereum led this bull market to begin with. Spring, exactly the same time. It happened in the middle of March. All of our tokens did that. Our plays in Fetch, which produced 400% over top of Bitcoin's price in its initial movements, all hit this spring between March and May. Between the pandemic and the riots in the United States, we saw the last point of supply come in here. Very, very prominent in the start of the bull market. The rest of the people here haven't even really figured out we're in a bull market. We have been in a bull market since March. We have been in a bull market for 6 months. What's most notable too is that we had 6 months up. We'll probably have about 4 to 6 months of sideways and then a breakup. So a year effectively to the start of the cycle. You see 6 months up, 6 months sideways, another 6 months up, another 6 months down. It is fascinating to me on how much retrospective study I've been able to do where these cycles move through the spring and into the fall. From the spring to the fall. Oh, look at that. Spring, fall. Okay, great. Now, reaccumulation. This is very, very potent for me for two reasons. A, it gives me the confidence to know that this is a bull market when the rest of the retail traders have not even arrived yet. The retail market isn't even here yet. They haven't jacked up the price. One of my other favorite ideas is you want to know the best way to advertise something? Slam the price up. And that's what bulls do. They mark the price up so that they can sell on unsuspecting retail traders who have no idea how the game works. I do suspect we'll go probably as high as $3,000, but even still, it's not my point. I don't need to make a prediction. What I need to do is follow the markets. So we've been hitting this creek here. This is ultimately going to be an extremely bullish, fun year and a half, probably 5 years ahead of us. I'm a little worried about 5 years afterwards, but that's okay. Let's go day by day, ladies and gentlemen. It's already difficult enough as it is. So here you can see, again, the 21 moving average on the daily. We have not been able to get above this white line here that goes like this. It's basically acting as our creek, and I suspect that it will continue to do so. So if you have not studied the Wyckoff method or any of Jesse Livermore or any of the amazing stock operators that have made hundreds of millions of dollars, do so, or just join our private group where we have tons of people studying and sharing those ideas on a daily and hourly basis. Okay, so let's move further into our thesis. And for the rest of you in the private den, you'll get your newsletter today. So keep an eye on that, where we go over things like fetch and ontology, some of the mistakes I made last month. Remember, there's no perfect trader. Anyone who tries to convince you that they've done everything right in the market is full of shit. They don't. No, it's impossible to do so. Even the best of the best will always make mistakes. And it's one of the things I learned as a musician. You know what they're really good at doing? Fixing them quickly. They're so good at fixing them, you wouldn't even know that they made one. That's how good they are at fixing their mistakes effectively. But they still make them. So Binance has been a really great play for us. We made our initial entries here. We took most of 70 to 80% of our profits here, and then I re-entered here, and I'm fully out of my position right now, just because there's a little bit of indecision in Binance, and I don't want to sit on it in case it does come back to test this lower LPS line. As we've seen many times before, I can go over multiple versions right now. Quantum, all the way back down to the regression lines. We can look at Fetch, all the way back down to the regression lines, right? Boom. Algorand, all of them came back down to the regression line after the SOS. This actually helped me write part of my thesis more clearly, which is that at an SOS phase now, I'm always liquidating 70 to 90% of my position here. And that's exactly what I did in Binance. I liquidated 70 to 90%. I think it was like 75% of my position right here. And I re-entered right here just because we saw a smaller reaccumulation range take place. And I'll quickly show you what that looked like too, because it was quite bullish, and we may see it forming in other areas. So if I can point it out, you might be able to use it in some of your trades. So here we hit this bottom, and we started to form a new trading range here, as you can see. And through that trading range, we actually had a rising gradient bottom, a very bullish sign in our accumulation ranges. And I'll go back, I can show you in Ethereum the same thing, Bitcoin, same thing, rising gradient bottom in a smaller accumulation range before breakout. I took this trade, I did around close to 7x at a 20%, so I made like a good chunk of money in this last week, which is quite nice, but that's besides the point. I would much rather everyone recognize the importance of making a quality analysis over making money. Making money is a symptom and a side effect of making a quality analysis in the markets and following that trade strategy. I got to make a bunch of money because I followed that quality trade analysis. I closed out most of my position last night, and some of it I actually closed out in this mid-range here just because I like to be safe. So I'm not currently sitting in the Binance token aside from what I need in my account to maintain level 2 of VIP, because they give me much better deals on the trades that I make. We will be going over some futures videos, some margin videos. We're doing more educational stuff because you guys are asking for it, and I realize that a lot of people don't have that skill set or understanding about what it means yet, and I want to be here to help educate along my process, because the more I know, know, the more I learn, the more I can help share, and the better my understanding becomes, because it's easier to teach and learn at the same time. So there's a lot of money that's going to be able to be made in the markets in the next 5 years, I believe. If you are focused on learning how to make quality decisions in a market that has become professional at taking money away from people over the last 100 years. The stock market has never changed because human nature has not once changed. So I want to take a quick look at OMG Go as well, because it started to form a new trading range as well. We had Leanne Supernova she called this nice automatic rally out in the bear den for what was a 35% trade. I saw a few of you guys make that. Fantastic. Hats off. We can even see to some reasons why that was such a nice play. Here you saw us close into the 50 moving average on the 4 hour before we saw that 35 breakout. So very nice. I like watching these trading ranges much more than I like patterns. I hate patterns now. I'm like, head and shoulders, garbage, falling wedge, garbage. I want to know what the trading range is doing, and I want to see a formation of that trading range take place. So there's a few we're keeping an eye on that have started to form in this new style of trading range. Not ready yet. Don't make these trades. If you're new to this type of stuff, just watch, observe. Again, remembering that the quality of a decision, the quality of understanding where the market is worth more to you than the money you will make from the trade. Because once you know, you can make a lot of money from that trade. Anyways, I'll leave it at that. I really want to, we'll take a quick look at BAT too, because BAT did the same thing all the way back down to the regression line. Oh God, it's just such a silly, I built my position at the LPS phase here. Like I built my position right here. We had a 50% run. I made good money off that. When you talk like from here to here, I only closed out 30% of my position. This is where I did not have my new 70 to 90% rule. Closed out 30, and now I've had to hold on to this position till the end. Now, this is also why I recommend that if you're new to trading and investing, two things. Find an asset that you can rely on, like Bitcoin, and just constantly invest on a weekly or monthly basis, and don't even think about the price or where the markets are. That's good for you. If you actually want to become good at investing and trading, you need to know where you are in the markets. Right? So it's extremely important. I can't repeat that enough. Knowing where you are in the markets is worth more to you than the money you will make just messing around in the markets. So keep that in mind when you go to make your next position and your next trade. I want to thank, we're going to start off by going to this. We're going to end the show by going to this. We auctioned off in the private group 3 pieces of art that we did. I want to give a shout out to Dirty D, who was quick on the draw and bought all of them. There are 2 more left. I will leave them in the links below. You can buy BitMonkey for $34. Now, I don't need your $34. So what we're doing is we are auctioning these off for charity. So you can go in and you can buy these for the $34, and the money that you contribute to that art piece will go to Kiva. It is a nonprofit that offers no APY loans to underserved entrepreneurs around the world who are in rural parts that generally can't get banks or loans and don't qualify for those types of things. So because of Dirty D, we were able to help fund these 3 entrepreneurs. So just as an example, if you are the first to purchase the last 2 of these charity campaigns, you will get to pick which entrepreneur we fund. Now, going forward in the private den, we will continue to do that. The private bear family will get to pick the entrepreneurs that we want to fund together. But right now, I want to give a thank you to Dirty D NFT for buying those NFTs and helping us start our Give Back campaign. So one of the entrepreneurs we lent to, his name is Juan. He lives in Ecuador. He's got 3 children. He's been a vegetable gardener and farmer for 15 years. He learned to work from his parents at a very young age, and he inherited this coffee farm from his father. So he needs a loan of $375. No, he needs a loan of $375, and we lent him the last $30 of that loan. We've also loaned money to Martin in Uganda and Fidelma in Papua New Guinea. We're going to consistently do this with all of our marketing budgets. We're going to give it away to entrepreneurs. We're going to lend it to the entrepreneurs. They pay us back. And then every few months, we'll get to go pick new entrepreneurs to lend this to. So if you guys are interested in joining our Kiva campaign, the last 2 of these NFTs that you can find on Rarible or on OpenSea are available for purchase. For $34 in Ethereum, it's ridiculously cheap for the only art I have ever and probably will ever sell. For those of you that are wondering, this is me. I drew a monkey. I called him Bit Monkey, and there are 2 of those left. Anyways, I'm really grateful for that. This is I had a little moment when we were making this loan to both Fidelma and Juan. This was a big key moment for me. I had been wanting to do stuff like this for the lifespan of Arcane Bear, and to finally get to a spot where it's easy for us to produce and curate these types of marketing campaigns that are for the better benefit of other people is really, really important to me. So thank you guys all for joining along and making this type of stuff possible. This is Tio with the Arcane Bear. I want to thank you guys all for being part of such a wonderful journey with me. I'm signing off for the rest of the day, and we will produce a video again tomorrow. We'll see you guys again on the other side.